Hey, do you want to know the difference between male and female loan officers? Female loan officers are generally organized, male loan officers are generally unorganized. I know this from years of traveling around the country talking to both male and female loan officers, so I'm speaking to the guys out there right now. Organization's a big thing, right? Well, if you want to make sure that you're closing all your loans on time because you're more organized, you need a checklist. And Carl White and the marketing animals have a checklist for your mortgages to go through to ensure that you're closing all of your deals on time. They're going to give it to you free of charge. All you have to do to get it is click this banner right down below or over there. And oh, by the way, gals, you feel free to get it too. On with the show. Okay, so your Freddie Mac 30-year fixed rate average is right now at 2.94% at 0.7% cost. That is crazy low, yet once again, if you're selling rates below the threes, congratulations, you're doing better than the average loan officer in terms of rates.
I just want to tell you.
Hey, congratulations, it's a celebration, party all day.
If you're higher than the average, well, you know, you're on the wrong side of the fence here. But before you get your panties in a pinch over there, guys and gals, it's the nature of mortgage companies to move in and out of the market with their interest rates. So let's not freak out. Don't lose your mind today if your mortgage company is out of the market because they might be the best priced one tomorrow. What you ought to do is check your company's rates versus industry norms back in mid-2018. Strange thing to say, isn't it? It's because it appears that the second half of 2021 is going to look a hell of a lot like 2018 when it comes to the dreaded margin compressions that we saw before, as it pertains to the rates that your company is offering. Hint, they could be all over the board. Interest rates. Let me explain. From an article 4 years ago in 2018, and I quote, "The total mortgage origination volume has dropped by a staggering 20% in the fourth quarter of 2017, as compared to the third quarter, as opposed to the third quarter, and down by 19% as compared to Q4 of 2016. Mortgage lenders have again reported a negative profit margin," that's margin compression, "in the first quarter of 2018, okay, there's the year, citing aggressive competition in the market as the primary reason. Some of the other stated factors include reducing consumer demand, sound familiar? Declining interest rates, sound familiar? Increase in operational cost, sound familiar? And market trends changing, does that sound familiar? While the original costs of these mortgage lenders have remained constant, okay, our constant costs sound familiar, the reducing interest rates have been the reason behind the massive profit margin compression." Wow. Sounds like I'm reading something out of 2021, not 2018, doesn't it? So lenders and realtors, this is real important to understand. Let's break it down. Originations dropped by 19% in 2016. They dropped by 20% in 2017, which led to bidding wars for business. You see, in 2015, before that, mortgage companies were staffed to the hilt to deal with all the massive volume. That staffing is fixed costs. Because the industry was so saturated with business, margins, meaning the amount a mortgage company made on a per loan basis, was massive. No need to cut your rates and your margins when originations were falling off trees, and it was all you could do to keep pace with your turn times. Again, this is 2018. Sound familiar? Well, it should. That's what's happening right now. 2015 was very much like 2020, just not as big, and that's scary. So then as we go back and forth, in 2016, when the market started to change, originations dropped off, as I said, by 19%. Just like now in 2021. So all those fixed costs have a larger impact on profits per loan. You gotta pay the fixed costs, but with volume down, margins drop. Then in 2017, production down an additional 20 on top of that 19. That means production was down over that 2-year period from 2016 by 39%. Now, this means panic time for mortgage companies, doesn't it? How do they maintain their bulked up staff of processors, doctors, loan officers, assistants, funders, underwriters, receptionists, and all the bloated lifestyles that come along with it when all those better days have gone by? The answer is you don't. So in 2018, from the article in 2018, what they say, again, listen closely because history is right now repeating itself. Here we go from 2018. Mortgage lenders have again reported a negative profit margin in the first quarter of 2018, citing aggressive competition in the market as the primary reason. Some of the other stated factors include reduced consumer demand, declining interest rates, increased operational costs, and market trend changes. While the operational costs of these mortgage lenders have remained constant, the reduced interest rates have been the reason behind the massive profit margin compression. So is that what's happening right now? You bet your ass it is. Let's think about this. So here's a graph of interest rates versus refinance volume all the way back to 2016. Now you can see in 2016, the interest rates are in the blue and they start higher than what our refinance volume is. Now what happens is interest rates, they go up by late 2016, 2017, and our refinance volume, which is a shaded yellow, goes down. This gap that you're looking at here, that was the last margin compression. And as you can see, it goes all the way through to almost 2020. Then what happens? Now we can see as interest rates climb up and climb up, our margin compression stays down here as mortgage companies look for volume. Rates, what do? They start to drop off a cliff here, don't they?
It just keeps tumbling down, tumbling down, tumbling down.
And what happens to our refinance volume? Well, we can see with the shaded yellow, it goes up. This is the massive 2020 refinance boom, the biggest in the history of our country, that mortgage loan officers were the benefactors of. So what's happening now? Well, we can see over here in 2021, our volume has started to go down and our interest rates have begun to creep back up. So this big influx of refinances and our drop in interest rates over here, what goes up comes down. We expect these numbers to invert and our refinance volume to go down and rates to go back up in the near future. When that happens, 2021 and 2022 repeat what happened in 2018 and 19 with massive margin compression. So you see what's happening here is when volume goes down and rates go up, mortgage companies start to panic and they drop their interest rates and their margins and put themselves in what essentially becomes a bidding war. Lower rates to bring in more volume. If you think I'm wrong, look at what the CEO of United Wholesale Mortgage just said a few days ago. For Matt Ishba, UWM CEO. Will margins compress? Absolutely, they will compress. They usually go from all-time highs to all-time lows. That's what happens in the mortgage business, and then they'll settle into normal numbers. We didn't expect them to go down to this point in this part of 2021, but we're excited about it because we're going to still produce a lot of income where our competitors might not. And at the same time, we're going to take market share and show you that we are the elite mortgage company. So when the second largest mortgage company in the country says this, let the margin compression games begin. As for you loan officers out there, as things start to go topsy-turvy and rate disparities amongst companies starts to shift, as we saw before, just make sure that you're aligned with the right company so you have all the appropriate tools in your toolbox to build your business the way you need to. With that said, I hope you all have a great day. It would be super helpful if you shared this. If you're thinking about a mortgage company that you'd like to go talk to, let us help you out with that. All you have to do is hit the Contact Us button right up above, and I look forward to seeing you guys tomorrow. Chicken chow mein, brothers and sisters.